Hello and welcome back to another Q&A session for the Investor Financing Podcast. I'm your host, Beau. We have Bill here. He's going to go over a couple of questions that we have. So here we go.
All right. Hi, Beau. This one comes from Louise and Mitch. I am a longtime fan of your show. My husband and I are both full-time employees. My husband works in tech and I am in HR. We have a small portfolio of rental properties, and at some point, we'd like to quit our jobs and run a business. So far, we have been exploring starting a coffee shop franchise. Currently, we have an interest in the following franchise concepts. However, just to note, we are just starting our search, so this list could change. We have on our list Scooter's Coffee, PJ's Coffee, and CAFFEBENE or CAFFEBENE. Not sure how to say that. We would like to utilize our great credit and income and assets to finance as much as possible, as we are also trying to grow our real estate portfolio and believe in good debt. We are looking for some guidance and would love to hear you talk about options out there and maybe what we might start to look for as we dive deeper into the process. Thanks.
All right. Thanks for the question, Louise. So I think all of these, I did a quick check and I'm familiar with two of them that they're all on the SBA Directory. So that means they've been vetted to be approved, which essentially means they're SBA eligible, but SBA doesn't they don't vet the franchise on if it's a good franchise or not. Just be aware of that. They're just basically, it's been expedited so we can get financing. If it's not approved on the list, then you can't get SBA financing, or it's very difficult, I should say. So that being said, those three franchise concepts appear to be on the SBA approved list. So I think your next steps is really just kind of go through all the coffee shop franchises. A lot of people come into the franchise business thinking they want to do some kind of like brick and mortar location, and they end up changing. But let's just say that you've pretty much, this is what you want to do. You like the business model. I think you got to look at 4 to 6 concepts. And as you progress, you're going to go through all of the FDDs. You're going to pull up the websites. You're going to really kind of do some due diligence. The FDD is really the franchise disclosure document. It's going to tell you how many units are open. It's basically 23 key points where you're going to kind of compare and see what's going on with the franchise. Are they growing? How many units do they have? How many units close down each year? How many new units are going? So you really want to see what it looks like. You want to see where, depending on where you're located, are there any franchise concepts in your area? Maybe you can go visit them and see how they're doing. Then you're going to basically do a deep dive. You're going to typically work with a franchise consultant or advisor. They're going to help you go through all of this, the documents and so forth. They're going to put you in contact. Once you identify the franchise concept, you want to go down and do all your due diligence. You're going to do a discovery day with that franchise concept, where you either go into their corporate office or you do it virtually through Zoom. And you're gonna go through the whole process to see if it's something you wanna do. Now, obviously, what you wrote is that you're looking to leverage and you're looking to get SBA financing. So I would say that we'd be looking for a concept that is approved, that we can do SBA financing for, because you're gonna get the highest leverage that way. There's also some other additional financing that's non-SBA that we could look at. So those would be the best way to kind of start the process. As far as SBA, each bank that's an SBA PLP, they're a preferred lender. Typically who you're going to work with, a bank or credit union that's PLP. What I can do on my end is I can help you facilitate the whole process here. But what you want to do is kind of narrow down the search and figure out what the total costs are. Because when you're going through all the disclosure documents, they're going to give you a document which itemizes what you can expect, each of the costs, the build outs, the marketing costs, the royalty fees. So you're going to know what you're going to need roughly up front, or at least a range, because we got to know what the total project cost is going to look like. Obviously, if it's a cafe or a coffee shop, you're going to have to identify the location and figure out the rent costs and the TIs, what it's going to take to build out the location per the franchise specification. So once you get all that accomplished, then we have our total project costs that we can figure out. And this type of financing, depending on your strength as borrowers, if you have additional collateral, you can finance up to 90% of the total project cost. Now, most banks with franchises, even though the SOP says we need at least 10% equity injection, so that's 90% financing. Some banks will say, hey, we can do this at 80% or 85%. So we'd have to navigate that water and figure out what the best program would be. Typically, these programs are based on the Wall Street Journal Prime plus a margin. So it's a variable rate. It adjusts quarterly based on Wall Street Journal Prime. So that's all kind of the negotiation processes as we go further. But essentially, it is possible to get 90% of total project cost financed. I would note to you that if there's a collateral shortfall, which on this it sounds like there will be, that they will look for additional collateral. So if you had a rental property, let's say, and there was a $250,000 collateral shortfall, they could want to put a secondary lien on one or two of your rental properties, just so you know how the SBA 7A process works. Now, sometimes we're able to work with equipment finance companies who will finance all the equipment needed and most of the build out. So there's other options, but usually SBA is the most advantageous, especially with these coffee franchise concepts, because they're usually a couple $100,000, if not greater. So Louise, I hope that helps. You can book a call below. Happy to discuss diving deeper on this, on this journey with you. So thanks for the question, Louise.
Hi, this is Beau, host of the Investor Financing Podcast. Are you a real estate investor with properties and you're trying to figure out how to refinance or grow your existing real estate business? Need some clarity and a game plan for moving forward? I'm offering a free strategy call where we dive deep on your real estate investing goals. I'll help you come up with a strategic finance plan that will help you get to where you want to go. Whether you've got a portfolio of 30 properties or you're starting out with your first property, I have a framework that has helped many investors grow. If you're interested, book a call below in the Calendly link.
Hey guys, Beau here. If you enjoyed what you saw, please subscribe to this channel. We talk all things financing. I've been in the lending industry for over 20 years, and I'm happy to answer your questions and provide great content.